So how do you mitigate the downsides to investing? What do you do to protect yourself?
So for us and me in particular, I tend to be more conservative. And I will say, like, these periods of time, everybody's gone through distress, right? So nobody can tell you that we've had no distress. It's bullshit. I think we fared it really well for a number of reasons. One, we typically try not to do bridge debt. We typically try not to do debt fund debt. Now, again, people do it. They're super successful. For me personally, I don't love it. We try not to do really short-term debt. And it paid off in this last cycle, right? Because we only had a couple loans where we had to kind of fight through the process over a large portfolio, as opposed to having a lot of loans coming due at once. So we're still sitting on loans with a 3% interest rate or IO on deals, and we're like, thank God, we have some breathing room. So that to me has really paid off. We typically don't love to do high leverage, right? Now, if you think about it, like, there are folks out there that do super high leverage, short-term debt, and that fuels a lot of growth and success, right? But when that music stops, how do you maintain it? Some have fared better than others, right? I think a lot of the folks you see who are in trouble right now had incredible growth, but did it by doing like floating rate debt, super high leverage. So for us, we're typically like 65% LTV feels nice to us.
Yeah.
Raising the dollars day one, sort of having that reserve. And then, like, look, if the world's going to shit, we're going to stop construction. We're not turning units. When the world starts going to shit and the rents drop, we're like, all right, let's just pause. Let's just do quick flips. Let's just paint and carpet for now and figure things out. So I think to us, and now I kind of feel vindicated, right? Like, our growth was probably slower than some of our peers because we weren't doing high octane stuff. But right now we're like, all right, we can play offense. We're not playing defense.
Yeah, and it's so important too, because I think right now is one of the best buying markets I've seen in my career, which has been, 7 years, so it's not been forever. Wasn't around in 2008, 2010, whatever. Do you feel like it's a buyer's market? Do you feel like if you had more cash, you'd be on a buying spree, or do you still think the market hasn't reached equilibrium where it makes a bunch of sense?
It's not a buyer's market because we're out there buying deals now. And I'll tell you, like, average, we bought 8 deals a year on average since 2007. Last year we bought 1 deal. This year we bought 1 deal in Beaverton. We just closed on a retail deal on Sunset Boulevard. We just went hard on a retail deal on Larchmont Boulevard. So I would say it's not a buyer's market because we have capital to deploy. I think a lot of people are sitting on the sidelines in terms of sellers. I think, right, like, and you guys talked about it on your podcast, like, where the debt market is, right? It's not a great place right now. And I don't know, there's always this conversation of like, have we hit bottom? Are we in a recession? Like, we're definitely in a real estate recession. Mm-hmm. Let's not kid ourselves. Mm-hmm. The general economy is a different issue. But it doesn't feel like it's a buyer's market right now. And it's different. In 2008, and you learn something new for every cycle, but like 2008, I remember sitting on my hands at the office. So it'd be nothing was going on. You'd work for a couple hours and you just sit on your hands. And I was like younger then. So I was like, well, I'm not leaving the office. I'm going to sit here and read the newspaper for 4 hours because that's what I'm supposed to do.
Yeah.
This time it's not a lot of deal volume, but we're super busy. Just everything's harder to deal with. Everything is harder to manage, right? So it's more effort for less reward right now.
Interesting. So if there was a 20-year-old or young 30-year-old and they wanted to start and get in the real estate investment and syndication business, what advice would you give them, and how would you tell them to start to have the best chance to actually succeed in it?
A lot of different things, right? Start small. Start with what you know. Small deals, small mistakes. Big deals, big mistakes, right? So do a few and learn. Own up to your mistakes, right? And to your point earlier, like, if you're transparent with the investors, they'll give you a second chance. To me, like, I actually, like, and a lot of people have asked me, like, hey, where do you think I should start? I'm like, I really like that the model. Do home flipping, but like, buy an old house, renovate the inside. Don't add square footage. Don't add a second story, because then you get caught up in city of LA permits, and that's a nightmare. But do it like an aesthetic cleanup, because people don't want to do that. Do a few of those. You're going to learn a lot. right? So start something like that. That's why you see a lot of guys buy a 3-unit deal, right? Because it's manageable and you can do it.
And you get the practice and you understand what things go and
to me, I'll say it's also investing is long term. Like, you know, like with Bitcoin and all, you buy Bitcoin at 16,000, it becomes 34,000 the next day, and you're rich, right? But that's not how I like made money. Like it took a really long period of time to in investing.
When do you know to buy and when do you know to sell?
Like you savvy investors invest through all cycles, right? So you should always be buying and selling. But like, let's talk about right now. We wouldn't really necessarily sell a deal. Rates just got cut, so now things are kind of picking up, and we're actually like looking at selling some of the deals. But like, you have to understand where that market is and if there are buyers out there. And I think you could attest to this. If somebody put a deal on the market, let's say a year ago, the impression was probably they had to sell. When you have the impression, if somebody believes you have to sell, right, they're going to go like, wow, I'm going to take advantage of this guy, right?
Totally.
I'm going to lowball him, right?
Yeah.
So we tried to avoid that period of time. But at the same time, there just wasn't a lot of deals to buy, right? Things have slowed down a lot. And part of it, frankly, has to do with ULA. I know we talked about LA, but we'd be remiss not to talk about like ULA and the chilling impact it's had on the deal.
Let's talk about that.
Oh God, can we